What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY and break down some very important things that Elon Musk, the man, the myth, the legend Elon Musk said about the markets that's very important and what may affect the market moving forward. Before I break anything down about Elon Musk and what's going on with his tweets, I do have to mention a couple of things first. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, each worth up to $2,000, and any could be a free Tesla share. The offer ends in 7 days. Check it out before they run out. With that out of the way, let's get on with the video. So, SPY was up 1.85% on Friday. So far, the market's holding up quite nicely. I'm sure a lot of you guys noticed this. But the question that comes on a lot of people's minds would be, do fundamentals align with this price action? The answer is clearly no, but why is the market pumping? That's the first thing you have to remember. There are many reasons as to why the market's pumping. There's a lot of manipulation and a change of interpretation of data because of what the market makers are seeing. As I mentioned on this channel countless times, okay, there have been millions of people shorting the market extremely hard every single week, especially on Fridays. And the market makers they have a tendency of destroying people on those Fridays. Uh, Typically, not always, but typically. And if too many people are shorting the market, it's very unlikely they're going to be right. Very unlikely. And this is leading to more pain and pain and pain for the shorts on a day-to-day basis. That's part of why the market's holding up so nicely. There are other reasons as well. Jerome Powell did not provide the necessary catalysts to truly crash the markets just yet. At least in terms of his words, he's not really like admitting there's going to be a bigger recession or anything like that. And on top of all of that, I mean, he is technically doing something, which is the rate hikes and the tightening of policy that could lead to more downside for the markets. But I want to break down what I think is likely to happen. I mean, I don't want you guys to take this video as seriously as my other ones because I can't really predict many months into the future, but I could give you guys a small attempt to do so. Um, Looking at Elon Musk now. Elon Musk was once again saying that the Fed data has too much latency. The mild recession is already here. He does not agree with the fact that the Fed keeps raising rates. He does not agree with the way in which the Fed is handling the situation. He also said right before the FOMC meeting, further rate hikes will trigger a severe recession. Mark my words. That's insane. That is kind of chilling if you think about it. And I want to break down what this means for the stock market. Excuse me, sorry guys. For the market right now, there's a lot of tension and a lot of events that are going on, especially with the banks. We also have the debt ceiling crisis potentially developing if we end up getting very close to the deadline, which could lead to some selling pressure for the markets. I'm thinking that we have some catalysts to cause some downside. It doesn't have to be a crash yet or anything like that, but we could see another pullback in the market soon. I also noted in my previous video, we have CPI coming out. The manufacturing data was suggesting higher prices were coming. And then unemployment is still too low. The jobs numbers are too strong, which incentivize the Fed to be more hawkish, which could lead to more inflationary pressure. And on top of all of that, for April, we saw gas prices up another 18 cents on average in the USA. So all of these things are pointing in the direction that we might see a bit of a pullback. So I'm thinking that the market might pull back a little and get one more pump first, right? We could pump a little bit more on Monday, Tuesday, but then by the time Wednesday comes, we might see the start of a pullback, and we might start to see SPY fill some of these gaps, right? There's the gap around the 400s, another one lower than that. There's actually 3 gaps, really big ones, especially closer to about 400, and there are even more like much lower, but I don't want to talk about those just yet. But I do believe SPY could come down and has some downside to come soon. And I think the CPI report might cause that by Wednesday. Approaching Wednesday, we might see the market pump more, as I mentioned in my previous video, but after Wednesday, we might see the market pull back. But is this going to be the crash? Especially with the debt ceiling news. Typically, the debt ceiling does not always cause the market to crash. There are some instances where it has happened, and when the market pulls back, we usually get a 5 to 10% pullback. Typically, I'm not too sure what the extent is going to be, considering that Janet Yellen and I think it was Jerome Powell mentioned that they're going to raise the debt ceiling anyways. Not too sure yet until we get closer to the news. But the bottom line is we are due for a slight pullback soon. So yes, we might pull back. We might push up first and then get a pullback later, maybe after CPI. But then I don't think that's going to cause the crash yet. I think that's going to depend heavily on what the Fed does in June/July. We're about a month away, a little over a month away from the next FOMC meeting. If the Fed pauses, and you have to remember the Fed does not always pause because things are good. They could also pause early because things are bad. If a lot of banks start collapsing and we get lots of bearish catalysts, the market could pull back. You could see SPY get closer to where the 200 EMA is, by the way, around this like 399 level. But then the thing is, sorry, right here, if the Fed pauses, right? If the Fed pauses, we might get an initial rally again. And what I suspect is these market makers might try to keep holding the markets up for another few months. We may not get the big crash yet or anything like that. We might just see a bit of a pullback, then we might get another rally. We have about 2.7 million puts expiring on, what is this, June 16th. There's also a lot of puts expiring on May 19th. So one of these days, I think on one of these days, we might see the shorts get a victory. Maybe the market pulls back first by the May close, but then for June, we could get a bounce. So what I'm seeing is the market maybe pushes up a little bit, drops after CPI, but we bounce thanks to the Fed. The Fed might announce a pause soon. Maybe they do it in this meeting, maybe not. And if the Fed announces a pause, the market might get one last rip to the upside. But then here's the problem. Maybe the market holds these levels for another month, 2 months. Maybe it does. But there's a problem. And that comes from what Elon Musk is saying. Elon Musk is telling us that we're in a severe recession already. And what that means is very soon we are going to see pain in the jobs market. Unemployment is going to start skyrocketing. And then after that, earnings are going to start declining. We haven't truly seen earnings decline just yet. I believe it's very likely to happen probably by the time we get to July. Because by July, the Q2 earnings report is going to come out. I'm thinking that's when we're going to see some pain, July. And I think that there's going to be more fear that emerges about the recession, and the reality is going to hit us. And so far, people are not accepting or not seeing the true reality of the situation. There could be a credit crunch. If it does happen, then a lot of banks are going to lose their ability to take on loans, and that could kill liquidity in this market. So there are catalysts that could cause a bigger correction, if not even a crash. It's still possible, right? But in the market's eyes, the market doesn't see it yet. The market's holding up nicely. So what's going to cause the market to do it? Earnings recession, maybe hot CPI, maybe the Fed could play a role. The debt ceiling could play a role late, but I'm not too sure about that one. And we have a bunch of different catalysts, maybe a credit crunch, bank failures, all of these things, the recession, businesses struggling, all these things could still cause a crash. And if it does happen, I don't see it happening for the short term, guys. I don't think it's going to happen like May, June, July. I would say closer to like September. Much later is when we're going to see a bigger correction. I think that is what's likely going to happen. And I think Elon Musk is right about the recession. The market has never like completely bottomed before a recession historically. That does not guarantee anything though. But just to be clear with you guys, right? I'm basically predicting that the market's going to pump a little bit, come down after CPI, try to bounce off where the 200 EMAs or something like that, thanks to the Fed possibly pausing or something else like that. And the market just continues to chop around like it has been for the last few months. See how the market's just chopping around? We may continue this for a few months, but then eventually by the time July to August comes, we might start to see earnings decline, the recessionary fears set in, bad news comes out from the banks. All these factors are going to start to settle in later on during the year. As we get closer to September, October, then we might start to see the market decline more. And I think that's very likely. However, when it comes to the decline, I don't know how low we're going to go yet. And I don't want to talk about that too much as being objectively the truth. What do I mean by that? When the market declines, and what I do on this channel is I look at levels, I look at indicators. There's no indicator right now that is showing the market crashing right now. It's not happening right now. So what you have to do is look at levels, look at confirmation. Okay? If the market, let's just say there's bad news in September, well, if that happens and the market does start coming down, we have to watch particular levels. We have to watch 400. Does SPY hold 400? If 400 breaks, I'm still not going to be 100% convinced we're going to crash to new lows. Even if that happened, I'm then going to watch 377 to 380. That's important support. If that fails, then I'm going to become very concerned. And the next important level is going to be around the 200 EMA. If the market hovers around these higher levels, the 200 EMA is going to be higher, so maybe around like 370 or so, maybe 365 to 370, who knows where it's going to be. But the weekly, go on your weekly chart. If you guys have your charts open, look at the 200 EMA. Watch that carefully on the weekly time frame. Okay? Because if in September, if there's a bad piece of news, the recessionary fears come, and we break below this red line right here, if we break below, as of right now, it's at like 366. If we break it, we're going to likely crash to new lows. I'm going to be convinced then, or like I'm going to be very confident that it's going to happen if that were to be the case. But it's not happening right now, and that's the reason why I don't really know what's going to happen in many months. It's very hard to predict given all the data that comes out. But I do want to at least talk about it, right? I can't just ignore this. I need to at least address this because of the things Elon Musk is saying and because of the things that are very possible. Okay? So don't worry about the crash to new lows just yet. Be open to the possibility, but you have to watch the levels carefully. Secondly, like I said before, I'm anticipating the market might just cool off a little bit, then get one more pump on Monday/Tuesday, fill this gap, and then CPI is going to cause us to either pump or drop. I think the odds favor it causing a bit of a rug pull. Seems more likely because we're pumping so hard approaching it. There are a lot of gaps below. There are 3 big gaps on SPY, and don't forget about the saying, sell-in may go away. We might get the correction later on after CPI. It doesn't have to be a crash. It could be it, but I'm not really seeing signs of that happening. And I think that we could still try to bounce as we approach the Fed meeting because the Fed might announce a pause soon. If Powell just says the word pause, they're going to try to squeeze shorts. Part of why I still stand by this is when you look at the options chain, there's so many people shorting extremely hard still. So maybe we get the balance around this June to July period. There's a lot of shorting, excuse me, between May 19th and June 21st. No, I'm sorry, June 30th. There's a crazy amount of shorting during this period. So that we might not crash during this whole time. We might get a rebound thanks to the Fed pause. But then later on, I could still see the market coming down. Eventually, they won't be able to do it if things get bad enough. And Elon Musk is warning it's likely going to happen. And I think it's very likely that he's correct about the severe recession. But I really don't want to talk about the market crashing to new lows or retesting October lows until we start to see signals of it in the eyes of the market. And the market it could remain irrational longer than you remain solvent. So you don't know exactly how it's going to play out. But I just want to note all of this so you guys are prepared. Okay? If we are going to crash, I wouldn't expect it until later on. I think it's going to take a little longer. I don't think it's going to happen super soon unless we get enough bad catalysts. I think we have some time, and that's what I have for this video. My opinions could always change depending on the price action and the news. But for now, this is, at the time I'm recording this, this is the stats I have. I'm anticipating a bigger pullback because of this recession Elon Musk is talking about later on. More later, going into like the later months of the year, approaching September. And that's just my view, okay? Also, don't forget I have some merch for you guys if you're interested in buying anything. If you want a tank top that says to the moon or something like that, it's your choice. It should be around the comments section if you're interested. Anyways, I want to thank you all so much for listening. I hope this video provides some insights for you guys. I hope it was very helpful, and I want to be as helpful as possible for every single one of you. So thank you. Have a great day. Enjoy your Saturday. Enjoy your weekend, and I'll see you guys in the next one. The market to the moon, as the long term is still very bright despite what's happening for the shorter term with the recession and etc. I'm still very bullish for the long term of the markets, and I'll see you guys in the next one. Thank you and peace out.